If you are a Dubai landlord in 2026, waiting could make you more money, or it could quietly cost you leverage. The difference is whether your asset is in the part of the market buyers still compete for. If you want Astra Terra Properties to assess whether your property is better sold now, held for rent, or repositioned before listing, message us on WhatsApp early. In a selective market, timing decisions get more expensive when owners wait too long without a clear plan. Welcome to Astra Terra Properties. In this video, I am breaking down the question, do Dubai landlords sell now or wait 2026, what the current market is actually signaling, and how owners should decide between selling, holding, or waiting based on real demand instead of guesswork. Let's start with the big mistake. Many landlords still think the market gives them only two choices. Either sell immediately because the frenzy is fading, or wait automatically because Dubai is still strong. Both are lazy answers. The smarter answer depends on what you own, how rentable it is, how much competing stock is nearby, and whether buyers still see your asset as clean, usable, and worth the asking price. That is why the Q1 2026 numbers matter. Dubai Land Department reporting highlighted roughly 252 billion dirhams in transactions across around 60,303 deals. It also pointed to about 29,312 new investors and around 148.35 billion dirhams in foreign investment. That tells us one important thing. The market still has depth. Capital is still flowing. New investors are still arriving. This is not a dead market. But active does not mean easy. What has changed is selectivity. Buyers are not rewarding average stock the same way they reward stronger stock. Buildings with better usability, better reputation, cleaner layouts, more practical locations, and better rental logic still move. Listings that rely on stale pricing expectations, weak presentation, or area hype alone can sit longer and lose momentum. That is the real context behind the sell now or wait decision. If your unit is in a building with proven rentability, solid tenant demand, manageable service charges, and broad buyer appeal, waiting can still make sense. Especially if the rental income is strong and you are not under pressure to exit. In that case, time can still be working for you. But if your property is one of many similar units in a supply-heavy pocket, or if it depends on optimistic pricing rather than actual buyer urgency, waiting can become dangerous. Not dramatic, just quietly expensive. The longer a weak listing sits, the more negotiating leverage shifts to the buyer. And once competing stock gets more aggressive, your window can narrow without any headline crash. This is why I think landlords should separate themselves into two camps. The first camp owns hold-worthy assets. These are well-located units with reliable rental demand, decent service charge logic, functional layouts, and a believable leasing or resale story. The second camp owns timing-sensitive assets. These may still be sellable, but they face thinner differentiation, more nearby competition, or a weaker reason for the next buyer to stretch on price. If you are in the first camp, waiting may be a strategy. If you are in the second camp, waiting may just be delay disguised as confidence. So, how do you tell the difference? I would use three filters. First, rentability. If the unit became vacant, how quickly would it realistically lease at a defendable number? Second, liquidity. How many real buyers would consider this asset today versus only bargain hunters? Third, replacement risk. If similar or newer alternatives keep coming to market nearby, does your property become easier or harder to defend on price 6 months from now? Those filters matter because the strongest reason to hold is not hope. It is durable utility. A landlord should hold because the asset still produces income well, still attracts real users, and still has future resale logic. A landlord should sell because the current market still offers enough buyer depth to exit well before competition or fatigue weakens their position. There is also a pricing mistake I keep seeing. Owners anchor to the best transaction they heard about months ago instead of the buyer pool in front of them now. In a selective market, aspirational pricing does not just risk a slower sale. It can contaminate the listing. Buyers start assuming something is wrong. Agents start pushing harder on discounts. And the owner loses the first listing advantage that often matters most. That does not mean slash pricing. It means position intelligently. If the asset is strong, present it aggressively and justify the price with evidence. If the asset is average, do not pretend scarcity will rescue the strategy. Timing plus honest positioning usually beats stubbornness plus long days on market. So which landlords should seriously consider selling now? Owners with duplicated stock in crowded segments. Owners facing heavier future competition. Owners whose rental yield no longer compensates for the hold. Owners who want liquidity for a better reallocation. and owners whose property is still marketable today, but maybe easier to replace tomorrow. And which landlords are better off waiting? Owners of stronger buildings in proven rental corridors. Owners with healthy cash flow and no forced exit. Owners whose units still offer practical layout, location convenience, and stable tenant demand. And owners with a real hold thesis, not just a vague belief that prices always go higher. Do buy landlords sell now or wait 2026 is not really a yes or no question. It is a quality question. Strong assets can still justify patience. Weaker assets often punish hesitation. If you want Astra Terra Properties to review your property, model the hold versus sell case, and help you decide timing with sharper local judgment, visit Astra Terra AE or message us on WhatsApp today. And for your next video, watch our buyer's market breakdown or our Dubai market recovery guide.